What's going on YouTube? Welcome to the Credit Plug channel. So for today's video, we're going to be breaking down your FICO score, and I'm going to be going over some of the important factors for you to consider. So for those who don't know the different ingredients to the FICO score, so there's 5 major components. You have your payment history, which is 35%, amount of debt, which is 30%. You have your length of credit history, which is 15%, amount of new credit, as well as credit mix. But in today's video, I wanted to focus on the 2 largest components, which is payment history and amount of debt. So those 2 categories combined are worth 65% of your FICO score. So we're going to be breaking down the different components. So within payment history, there's actually several different components. So when you're actually looking at payment history, this is actually comprised of about 6 different components. So you have late payments 30 days plus, you have late payments 60 days plus, derogatory public records, collections, as well as the time since your most recent late payment, and accounts always paid as agreed. So these are subcategories of payment history. So then when it comes to amount of debt, you have accounts with balances, total balance on revolving and open-ended accounts, and then you have revolving utilization. So there's 3 subcomponents of amount of debt. Now, FICO literally tells you the top positive and negative factors that impact your FICO score. So you have no missed payments on your credit report. So the number of accounts with a missed payment or derogatory indicator, 0. You always want that to be 0. So it says right here, 98% of FICO high achievers have no missed payments at all. But of those who do have a missed payment, it happened nearly 4 years ago on average. The distance or the time since the late payment is also going to be a big factor. So the closer the time is to the recent late payment is the more negative impact. Now, as the late payment ages, it has less of an impact. However, as long as it's still reporting on your credit, it's still going to have a negative impact. Now, another positive factor, it says right here, you've limited the use of available revolving credit. For FICO high achievers, the average ratio of revolving account balance to credit limits is less than 7%. So if you want to be in that top percentile in terms of FICO high achievers, you want to have a utilization less than 7%. People who keep their ratio of balances to credit limit low pose less risk to lenders. Another important factor is the age of your credit history. FICO high achievers opened their oldest account 25 years ago on average. Now, this is one of the areas of your credit where you have to have patience and discipline, right? Because you're not going to have a 25-year-old credit history overnight. It's going to take time, especially when we're talking about your primary accounts. FICO scores measure the age of the oldest account and the average age of all accounts being reported. Generally speaking, having a relatively long credit history and not opening up new accounts is reflective of lower risk. FICO high achievers are people who have a FICO 8 score in the mid 780 range or higher. Now, another important factor that I've talked about in other videos is actually utilizing the credit accounts that you have. So as you can see right here, it says you've shown recent use of credit cards and or bank issued open-ended accounts. People who have demonstrated recent and responsible use of credit cards and or bank issued accounts are generally considered less risky to lenders. Now, banks and lenders want to see that you're actually using the credit that you have. Now, this is especially important if you're seeking to get high limit credit accounts because you really want to demonstrate that you have the capacity and the ability to use the cards, but also pay them back in a timely fashion. Financial institutions and banks like when you're using your credit accounts because they're making money off of you when you're using your credit accounts through transaction fees. Now, when we're looking at the amount of debt, which is 30% of your overall FICO score, there's 3 different subcomponents, right? So you have accounts with balances, total balance on revolving and open-ended accounts, as well as revolving utilization. Now, accounts with balances, I would say, is probably one of the most overlooked categories, right? So you always hear this, keep it under 30%. Some people recommend keeping it under 10%, but that doesn't mean that you want to carry a balance on every account. As it says right here, FICO high achievers have an average of 3 accounts carrying a balance. Now, even though the utilization might be low on all the accounts, the fact that you have multiple accounts with balances can ultimately drag down your FICO score. Now, one thing you can do is pay down a lot of those accounts and just keep balances on, let's say, 3 of those accounts if you want to be a FICO high achiever. Now, when we're talking about the total balance on revolving and open-ended accounts, most FICO high achievers owe less than $2,500 total on revolving and open-ended accounts such as credit card, charge cards, as well as department store cards. Now, the last important factor when it comes to amount of debt is your revolving utilization. So that's the percentage of of your revolving balances to your total credit limits. As it states right here, FICO high achievers have utilization of 7% or less. Now, when it comes to your overall FICO score, the two factors that you really want to focus on is your payment history and your amount of debt owed. Combined, that's going to be about 65% of your overall credit. You also have the age of your credit. Now, this is something that you're not going to have too much control over, especially in the short term, because you do have to allow your accounts to age, and that's something that is just going to take time. And then new accounts as well as credit mix, that's something that you do have control over, although it's far less impactful than the other categories. Anyways, that's all I wanted to cover in today's video. Let me know your comments and questions down below, and until next time, take it easy and we'll talk to you soon. Peace.